I'm Andrew Moran, Liberty Nation's economics editor.
Very, very rocky.
Death by government.
Drain the swamp.
Hello and welcome to another installment of Liberty Nation's Swamponomics videocast. I'm Andrew Moran, Liberty Nation's economics editor. This week, like a customer service agent, the Federal Reserve is asking 300 million customers to please bear with us. The Fed held its first Federal Open Market Committee policy meeting of 2024. Unsurprisingly, the Fed left rates unchanged. But what caught investors' attention was the FOMC statement. Here's the part that had everyone becoming apoplectic. Quote, "The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. Fed Chair Jerome Powell essentially repeated this sentiment during the post-FOMC press conference, telling reporters that officials think the United States is close to achieving its inflation objective, but it is not there yet. Additionally, with a solid labor market and strong economic conditions, the Fed has some room to keep rates higher for longer." This was the big part of the press conference, though. Powell said it is unlikely that the central bank would cut interest rates at the March meeting. Here is an exchange Powell had with Fox Business Network reporter Edward Lawrence.
Edward Lawrence from Fox Business. Thank you, Mr. Chairman, for taking this. So as I've heard from some district Fed presidents, is it, in your view, a little premature to think that rate cuts are right around the corner? And then when we do see that first rate cut, should we interpret that as the beginning of a rate cut cycle, or is it a one-off?
So I'll point to that language on your first question. We included that language in the statement to signal clearly that with strong growth, strong labor market, inflation coming down, the committee intends to move carefully as we consider when to begin to dial back the restrictive stance that we have in place. So if you take that to the current context, we're going to be data dependent. We're going to be looking at this meeting by meeting. Based on the meeting today, I would tell you that I don't think it's likely that the committee will reach a level of confidence by the time of the March meeting to identify March as the time to do that. But that's to be seen. So I wouldn't call, when you ask me about in the near term, right, I'm hearing that as March. I would say I don't think it's probably not the most likely case or what we would call the base case. Then your second question is is this the start of when we see a cut, is it the start of a cutting cycle, or could it just be a one-off? That's going to depend on the data. The whole thing is this is going to depend on the data. We're going to be looking at the economic data as it affects the outlook and the balance of risks, and we're going to make our decisions based on that.
Powell reiterated the sentiment on 60 Minutes, telling host Scott Pelley that FOMC participants do think it is appropriate to cut interest rates this year. When asked what is the danger of moving too soon, Powell noted that it could set off inflation again or halt its progress. Here is what he said.
Simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally. So we as a central bank, we have the ability to create money digitally, and we do that by buying treasury bills or bonds or other government guaranteed securities, and that actually increases the money supply. We also print actual currency, and we distribute that through the Federal Reserve Bank.
Whoops, I'm terribly sorry. This was another clip from 3 years ago of Powell on 60 Minutes. This is what he actually said. "I think more likely if you move too soon, you'd see inflation settling out somewhere well above our 2% target. So we think we can be careful in approaching this decision just because of the strength that we're seeing in this economy." Of course, the question is, why do interest rates need to come down at all? Why is easy money now the de facto policy of the Federal Reserve and the US economy? Well, it is comparable to why the US government is running a $1 trillion budget deficit every single year and spending like drunken sailors even in an expansionary economy. That said, it is clear that Powell and company are terrified of reliving the 1970s and 1980s. If you remember, heading into the 1970s, the central bank cut interest rates despite signals that the inflation monster was about to feast on the economy. By the middle of the decade, the consumer price index heated up and then plummeted. This offered the Fed some confidence, cutting interest rates in response to these trends. Well, the 80s arrived, and it was clear inflation was ravaging the country. The Eccles Building raised the benchmark Fed funds effective rate to nearly 20% as the CPI reached close to 15%. Until around 1993, inflation readings had engaged in stop and start patterns. The Fed followed this by hiking and cutting, hiking and cutting, hiking and cutting. The FOMC is likely concerned that this could be history repeating itself. Is it? There are plenty of signs that it is and that it isn't. On the one hand, you saw inflation ticking up much higher than expected to close out 2023. The various purchasing managers' indexes, or PMIs, alluded to higher input price pressures. And of course, the federal government is spending $7 trillion a year, and this is followed by a slightly higher M2 money supply metric. On the other hand, inflation expectations have plunged. The Fed's preferred PCE has shown signs of deflation, and consumer spending has slowed somewhat. Meanwhile, the financial markets are so dependent on the Federal Reserve and what it will do on our interest rates. They're begging for rate cuts and had priced in rate cuts for as early as March. Now that this has been thrown out the window, investors are pricing in rate cuts for May. Will this happen? It will all depend, as the Federal Reserve says ad nauseum, on the data. Until then, everyone will grab their magnifying glass and comb through every Fed statement, speech, and press conference. That's it for me this week. Please read my full Swamponomics column on the pages of LibertyNation.com, and be sure to check out my full catalog of previous Swamponomics TV videos and interviews. Thank you. I'm Andrew Moran, Liberty Nation's economics editor.
Very, very rocky.
Death by government.
Drain the swamp.